Is it time to focus more on market fundamentals and less on hype? As extreme heat triggers life-threatening warnings across the United Kingdom and much of Europe, Wall Street has received its own caution from JP Morgan Chase CEO Jamie Dimon, who described the current rally as a little tsunami bull run. He said markets remain in a difficult to stop resilient phase despite stretched valuations. Strong earnings, sustained artificial intelligence investment, low unemployment, and steady GDP growth may support the rally, but other risks are becoming harder to ignore. Markets appear to be shrugging off unsettling politics from Ukraine, Russia, Iran, oil, to America's relationship with China and the shifting world order. The S&P 500 has risen nearly 80% over the past 5 years, while the Nasdaq is up more than 86%. Even a 3-month global oil supply shock, which might normally have crushed sentiment, barely made a dent. Optimism around artificial intelligence and a Wall Street-friendly White House may be helping, but the upside from artificial intelligence and technology remains highly uncertain. Today, after a record-breaking SpaceX IPO driven by cult-like loyalty, we see major tech stocks in a downturn as Alphabet and SpaceX shares plunge. In a single day, Alphabet gave up over $225 billion in market value. SpaceX saw a 3-day decline of over $600 billion. If this does not make investors a bit jittery, perhaps nothing will. Investors are struggling to value unfamiliar companies built on uncertain artificial intelligence capabilities and the even less predictable space industry. Top talent is also moving more freely, adding to the confusion. Recently, research scientist Nobel Prize winner John Jumper left Google DeepMind to join AI startup Anthropic. Also unclear is the effect of Anthropic and OpenAI IPOs on the competitive landscape as players consolidate their financial structures. SpaceX yesterday sold $25 billion in investment-grade bonds to refinance costly debt tied to Musk's 2022 Twitter acquisition and earlier borrowing used to cover for a rapid cash burn. A new Fed boss, Kevin Walsh, has scrapped forward guidance, a move driving up Treasury bond yields. Some say we are being set up for an imminent tech wreck or an even broader sustained slump. US stock outlook remains mixed as traders digest Micron Technologies results amid solid gains from consumer staples, healthcare, real estate, utilities, and financial sectors. Small caps in the US also doing well. The Russell 2000 is up about 37% in the last 12 months. All this as surveys suggest more Americans since 2022 have seen worsened finances. Asian markets struggling for direction also seem to be racing to dizzy heights as today South Korea's Kospi leapt by 4% before receding. Investors in Asia, like in the US, are equally undecided on whether AI stocks are overpriced and suspect American interest rates might soon rise. Crude oil prices extended declines as concerns over potential supply disruptions eased. The Brent Crude Standard today dropped over 3% to under $75 per barrel, the lowest level since the start of the US and Israeli-led war against Iran. Trump also assured markets that there will be no tolls at the Strait of Hormuz. Safe haven demand has helped the US dollar reach a fresh 13-month peak against a basket of major currencies as investors repositioned for a possible global tech stock sell-off and future Fed rate hikes. Gold is also under $4,000 an ounce, the lowest price since November, amid the resurgent dollar. In the UK, the pound is still losing traction amid all the political instability following Keir Starmer's resignation as Prime Minister. The leader in the race to become the next PM, Andy Burnham, is reported to be drawing up plans for an aggressive program of devolution, shifting more power to local communities. Markets are understandably skeptical. Jamie Dimon's warning of a market tsunami should prompt investors to consider the potential fallout and avoid being caught in what could be a very messy debris when the waves finally settle. Hello, and welcome to Global Business Insights, where we bring perspectives to help you navigate today's more complex terrain. Treasury Secretary Scott Bessent today said the U.S. economy is back on the path to over 3% growth as the Iran war nears conclusion, adding that the U.S. will also oversee frozen Iranian funds when released. Let's turn to the UK, where unions are pressing for a maximum workplace temperature amid record heat, while businesses and the government push back. The trade unions with 1,000 people signing up are calling for a heat strike on what could be the year's hottest day. The Climate Change Committee has also backed a legal limit to further force cooling protections, while trade unions want a 30 degrees centigrade cap. The government says it has no plans for such a rule as businesses warn of higher costs and reduced hiring. In Germany, the IFO Institute Business Climate Index improved to 85.6 in June as expected from 84.9 in May. The current assessment index was at 87, higher than 86.4 estimates on previous reading of 86.0. The expectations index also improved to 84.1 from 83.9 in May. Large companies are laying off amid strong earnings outlook and more generous senior executive pay for performance reward structures. Last April, Meta revealed its best first quarter performance in company history as revenue hit $56.3 billion, up 33% year over year, also the fastest growth since 2021. A week before the earnings report, Meta had notified roughly 8,000 employees they were losing their jobs. But 6 weeks before that, it quietly granted 6 senior executives stock packages that could be worth as much as $921 million each. The European Union, Germany, and the Netherlands have joined Pax Silica, a US-led alliance aimed at securing artificial intelligence supply chains amid Chinese competition. The group aims to safeguard supply chains covering critical minerals, semiconductors, and related technologies. Alibaba has sued the Trump administration after being labeled a Chinese military company and added to a Pentagon blacklist alongside Baidu. The company says the designation is baseless, arguing that it is governed by an independent board and that the move violates its due process and free speech rights. China's technology rise continues with its line-shine supercomputer, now named the world's most powerful system for the first time since 2017, overtaking America's El Capitan. Powered entirely by central processing units rather than the graphic processing units commonly used in supercomputers, Lineshine is designed for medical research and advanced modeling. China is expanding its African footprint. Kenya has just signed a $1.2 billion deal with China Road and Bridge Corporation to expand Nairobi's Jomo Kenyatta International Airport. The project will nearly triple annual passenger capacity to 22 million. A previous agreement with Indiana's Adani Group was scrapped after its founder's U.S. indictment. Still in Africa, Willite has raised 27 million euros from the International Financial Corporation, IFC, and founding shareholders to expand its solar mini-grid operations into Nigeria and the Democratic Republic of Congo. Founded in 2018 by Axian, Sagemcom, and Norfund, the company already runs nearly 190 mini-grids in Madagascar and Mali. Afreximbank's African Trade Heatmaps 2026 says Africa traded more within the continent in 2025 than with any external bloc except China and the EU. Intra-African trade now exceeds trade with the Americas, the Middle East, and the Gulf, but still represents only about 15% of total trade, constrained by weak industrial capacity. Finally, in Nigeria, external reserves reached $51.04 billion in June, their highest level in about 17 years, supported by stronger foreign exchange inflows, reforms, and improved liquidity. The rise has boosted investor confidence and exchange rate stability, though analysts warn about the high debt, heavy debt service costs, and reliance on portfolio inflows, urging for more non-oil exports and foreign direct investment. On the debt structure, Fitch rating agencies joined the International Monetary Fund chorus to warn that Nigeria's proposed $5 billion total return swap with First Abu Dhabi Bank could hide sovereign debt risks and complicate future restructuring, as it only obscures the true scale and conditions of public debt. The deal, which lowers borrowing costs, refinances expensive debt by pledging naira bonds as collateral for hard currency liquidity, also raising transparency, governance, and rating concerns. Still in Nigeria, where the latest June World Bank GDP 2026 growth projection retains a reduced 4.1% compared to its earlier October 2025 forecast of 4.4%, the Manufacturers Association is warning that the sector faces severe funding pressure. Credit to the sector sank 22.5% from 8.53 trillion naira in December 2024 to 6.61 trillion in December 2025, one of the steepest contractions among major sectors. The MAN Director General Segun Ajayi-Kadir said the squeeze threatens success of Nigeria's 2025 industrial policy, adding that high prime lending rates averaging 24.4% and maximum rates of 33.8% have made expansion, technology upgrades, and capacity utilization near impossible. Man contrasted Nigeria's contraction with India's 9.6% industry credit growth and Vietnam's projected 19 to 20% credit expansion for processing and manufacturing. Amid a media blitz and very positive interest in the Dangote refineries, Nigeria's Securities and Exchange Commission has ordered an immediate halt to marketing for a purported Dangote petroleum refinery offering, warning that no IPO application has been filed. The regulator said ads, digital campaigns, and investment solicitations were promoting refinery shares and seeking advanced subscriptions. Dangote Petroleum Refinery has repeatedly said it has not authorized any IPO marketing, describing the reports and solicitations as unauthorized and inaccurate. The SEC warned that such promotions, including requests to pre-fund accounts or secure allocations, could undermine market integrity. Well, that's it on this episode of Global Business Insights. We are now on Spotify, Apple, YouTube podcasts, and most popular platforms where you get your podcasts from. Remember to select the notification button if you subscribe on YouTube. This is Bode Oshosami. Thanks for watching. Bye-bye.